Hello and welcome to another edition of Trade with the Knight. I'm your host, the Black Knight. Today is Thursday, the 18th of October, 2007, and today I am going to show you how to make 100 pips in just under 25 minutes. If you're trading just one mini lot, 100 pips equals $100. That's over $200 an hour, and I can't think of a job anywhere in the world that'll pay you over $200 an hour. Job, by the way, is J-O-B. I jokingly call that just over broke, because really, that's what a job does. It keeps you just over broke, gives you just enough to keep going back to the same old job. It's not really going to get you anywhere out of life. It's not going to help you break out of the pattern. That's personally why I spent the better part of my life looking for a better way, looking for a way that I could take my financial future into my own hands. And thanks to trading, I've done it, and I'm pleased to be able to share some of what I know with you and hopefully help you do the same. So, let's take a look at how to make 100 pips in just under 25 minutes. We're looking at a 5-minute chart of the pound-yen. It's a little after an hour after London Open, 9:15 GMT here. And what I'm seeing is price most of the morning has just kind of been bubbling back and forth. Keep in mind each candle is 5 minutes. And suddenly we start to see a definitive down pattern emerging. So that has my attention. And let me show you what happened on the next 5-minute candle. There. Look at that big sharp drop. We're seeing that the downward move is accelerating. We blew right through this 200 moving average. That's a simple moving average. I draw it in thick on my charts because it's a very, very strong support and resistance level. This candle ignored it. It blew right through it, and anytime a candle does that, it's got my attention. However, I'm not jumping in just yet. This is the common mistake so many new traders make, is they think they're going to miss the boat, and they jump in, they see a big candle, they get excited, they jump in right here, only to see it reverse. And now you're sitting in negative territory, your stomach's uneasy. Let me show you how to avoid that. Okay? What I did instead is I picked my Fibonacci tool and I measured from the top of where the move started, which is right about here, and I measured down to right here where the move ended. Since it's a downward move, I measure top down. We always measure in the direction of the move, in this case top down, and this is labeled 100 because it's where the move started, on down to 0 where the move ended. And now what I do is I sit patiently and I measure how far up the retrace, that is the counter move, goes. And let's see here. It's very brief. In this case I had to act very, very fast, but you see the counter move ends right here at 61.8%. What happens is these fib lines, they measure the retracement. They count up 23, 38, 50, 61.8. They count up and they tell me how far the counter move went as opposed to the main move. So when it moves 61.8%, I know that I should set my target at 161.8%. So I would enter right here, and in this case you see the wick is very long, so this happened fast. It came up here, touched it, and went back down. We had to be ready on our trigger, so we enter right around here. Let me give you a value there. 237.74 is where we got in, and we got in short, and we set in our target at the 161.8% Fibonacci. Let me show you how this played out. As you can see, the downward move is again starting to accelerate. Look at that. We blow right through the original low. We keep going. It starts slowing down here a little bit. If you took profit here, hey, that's great. That's it's already about 70, 72, 73 points profit. So very good if you took that. That's certainly the safe trade. I trusted in my technical, so I hung on. And look at that. The wick comes down, stabs right down, right at 161.8% before shooting right back up. Let me give you a measurement on there. That's 236.71. That's actually a little more than 100 pips. That's 103 pips. And let's count the candles. We have 1, 2, 3, 4, 5 5-minute candles. As I promised, 25 minutes, 103 pips. Now, I had my target hard set here, so it exited automatically. I didn't even have to be ready on the trigger. As soon as it touched that 161.8, I took an exit, and good thing I did. Fear and greed rule the markets. If I would have been greedy and hung on for a little more, look how sharply it retraced, how fast, because it's a wick, not a body, and look, it kept going almost back up to our 0 point. So there you go. That's a perfect technical trade, and you can keep doing this sort of thing all day long. Let me show you a pattern actually to look for real quick. So what I've gone ahead and done is I've labeled these points, and if you visit my chat room, you will see that we often refer to this A, B, C, D. What you see here is point A. That's where I start drawing the fib, and point B is right here where the move ends. So basically point A, I don't know if you can see that, it gets a little bit cut off, but right at the top of the screen, point A is where I would click to draw my fib, and point B is where I let go. So that draws the fib. Point C is where I enter, meaning that's where the retracement ends and I see the original direction of the move resume again. So A to B is how I draw the fib. If we were measuring an uptrend, these would be reversed. I would start at the bottom, measure up. Since this is a downtrend, we start at the top, measure down. Always the direction of the move. So that's our point A, our point B. Then we sit back and wait to see where point C is. Point C is where we enter in the direction of the original move, and we sit back until we reach our target at point D. This is a classic ABCD pattern. A good friend of mine, Dave Forex, teaches this in our chat room at fxnight.com. You can see him in there throughout the day. I come in from 1830 to 1900 GMT to do a market wrap-up and Q&A session. Certainly hope you join us, but this is a classic pattern, ABCD, or another way to look at it is zig, zag, zig. Anytime you see that in the charts, measure it with a fib. D is your target where you want to go out, 161.8% in this case, because the retracement was 61.8%. If the retracement is something else, like 38.2%, then the extension would be 138.2%. You'll learn these over time and just from watching the charts. So there you go, over 100 pips in just under 25 minutes. Good trading, everyone. We'll see you next time on Trade with the Night.